Welcome to Power Charting. I am your host, Bruce Fraser. Tape reading is a very specialized aspect of the Wyckoff method, not widely understood, not really widely used. And for those that do use it, it's incredibly powerful tool technique in chart reading. I think it is the premultuate methodology in chart reading. And if you will stick with me here, we will explore this very powerful special approach. And I think you will find it remarkably rewarding if you stay devoted to it. Now, this is a discipline. It's a mastery process. It requires a tremendous amount of work. So I don't want to leave you with the idea that it's easy to do, because there's a lot of nuance to it. But you can learn it. You can be really, really good at it. I'm going to show you some resources that you can use to be able to develop your skills in the tape reading concept. Here's Dr. Pruden. In 1976, he started teaching the graduate program at Golden Gate University in technical analysis. You can see him here on the right with his book, The 3 Skills of Top Trading, after it was published. A remarkable educator, just incredible person to work with. I had the great good fortune of teaching with him side by side for 27 years the Wyckoff methodology and teaching Wyckoff's very own method of tape reading analysis. And I would like to be able to, with Hank's help, and you'll see why in a minute, here's the Pruden model. And it's absolutely a brilliant model. And what you're going to discover is that there are really 4 elements at work here that we talk about repeatedly. You're going to see, if you've been following power charting, that I encompass these different principles of market analysis in my power charting episodes. And you'll see here accumulation. This is the accumulation process as described by Richard D. Wyckoff. The markup phase, then the distribution topping phase. This is the classic cycle. The cycle is fractal. It works daily, weekly, intraday, etc. And so you can see also the concept of contrary opinion. The innovators are the ones that are in at the very beginning of the move. Early adopters and early majority come in to the mid part of the move, and then late in the move is when you have generally the bulk of the public arrive, participate in the last stages of the bull move, and then they are the ones that inevitably are there at the top, which is part of the distribution phase. And we do not want to be there with the public. We want to be closer to the innovators in our market timing and analysis, and we're going to do that through the Wyckoff method. And so the 4 elements, and you're going to see, these are what the elements we talk about in power charting week to week to week. So we have price, and then we have volume, which is defined by that bell curve. A lot of discussion of volume here in a minute, more on that as we go. This is all explained in Hank's book. And then we have sentiment or psychology, very important, integral part. We want to be there with the early adopters, the innovators. We want to be there when the trend is long and strong, and we want to avoid the big downdrafts. And sentiment tends to work contrary to that. The most bearishness is at the bottom. The most bullishness, ironically, is at the tops, which is remarkable, but that's the way it works. And then time, it takes a certain amount of time, cycles, etc., for these cycles to unfold in any time frame. And so we have to show the patience and the focus to be able to stay in the time frames that the market extend to us. Monetary conditions, very important backdrop to the whole thing. We talk a lot about monetary. Monetary is very important to the flow of money in and out of the market. Absolutely love this cartoon. This is one of Hank's favorites. And you can see here, this is the composite operator types that are there very early in the cycle, leading the way up, and they have their modern 16-cylinder methodologies that they use, and they lead the pack up to the top of the mountain, which is the Wall Street Alps. the top of the bull run, and they are enjoying all the benefits of being in the trend earliest and longest. And then you have the public trying to climb on the experts' ice wagon. And this is a big warning about the experts, in that the experts are the ones that tell us when to, the coast is clear, when to buy the market, etc. And you can see that the expert ice wagon is pulled by these horses which are pooped and tired, and the wagon is very overloaded with the public, with customers. And here this one gentleman is saying, I've been itching to buy stocks, but I had to wait until the experts told me, and now the experts are saying that all is clear. So how do we know? Here's just an example of the experts. So this is the CNN Fear and Greed. I show this because it's easily accessible by all of us. And you can see here that we have an 80% bullish reading here in mid to late December of 2023. But where were they at the key lows in October? 20% bulls. Back in March, 20% bulls. Even lower than that at the end of the year 22. And so the sentiment tends to work contrary to the opportunities. When everybody tends to be afraid and dislike the market, it tends to be the time when the opportunities are best. And when they love the market is when the opportunities are stingiest. And so this is just an example. There's many others, and I show this from time to time, but just to make the point that we want to be thinking contrary to what the majority are thinking. Now, turning our attention to the work at hand today, which is the Wyckoff method of tape reading or volume price analysis. And you'll see more on this in a minute with examples. But here is Wyckoff's rules. And this is by no means a complete list. It's much deeper than this. There's much more. We're just making introductions today. And if you like what we're doing here, let me know, and we will do more of it in the future. So number one, price movement should always be proportional to volume. And so a lot of the price analysis that we're going to do bar by bar related to volume is going to help us to understand where we are in the unfolding cycle of accumulation or distribution. So A, bearish movements. A, low volume and price up. So price is up, but very little demand, and that is generally bearish. B, moderate volume and prices down, which shows supply is starting to show up and is present, that is bearish. High volume and price down, that's active selling taking place on a high scale. That is likely institutional selling, bearish for sure. High volume and price up, but modestly. In other words, narrow spread, but high volume, that's churning. It shows effort and result, a key Wyckoff law, lots of effort and volume, very little price movement. The result is minimal, that is bearish. Bullish movement, low volume and price down, that's bullish because that shows that there's an exhaustion of supply. Moderate volume and prices up, that's bullish because it shows that volume is starting to follow prices up, which shows demand is present. High volume and price up is bullish because it shows there's active demand. So supply and demand is another key law of Wyckoff. So and then D, high volume price down modestly. That is bullish because that shows that there's absorption of shares, and it's not, that's effort and result. The effort is high volume. The result is very little downward movement, which shows that there's an inability to be able to take prices lower on active selling. Now, number two in the Wyckoff rules, extremely high volume usually marks a turning or a hesitation point. That is a stopping action. That is often associated with climactic type behavior. 3, extremely low volume often immediately precedes extremely high volume. And so number 4, a moderate to wide price spread by moderate volume is usually bullish, implying few sellers. So price is able to move easily in the upward direction. It's not taking a lot of volume, but moderate volume to drive prices up. That's good. 5, wide advance, and I'm going to show you examples of these. 5, wide advance created by strong volume is almost always bullish. So widespread in prices, strong volume, active demand, driving prices up, that's bullish. And then volume should increase on legitimate breaks from technical patterns, breaks through resistance. So that shows the breakout. It shows that there's active demand at the breakout point, and volume should increase as that's happening. We always are suspicious if we get a breakout and volume is low or contracting. So with that, let's move on and show some examples. Again, this is not an all-inclusive list. These are some of the high points, and I want to just really to introduce these concepts to you as we go. So here's accumulation schematic here. 2 examples. These are available for you to read about in the July 1st, 2015 blog that I wrote, Wyckoff Power Charting. Let's review. And this is just simply following a selling climax, an automatic rally secondary test, and then this process, which is absorption. You can see that there's generally a hinge type development where volatility is coming out of the market as you get deeper into the accumulation. And then finally, on good volume and widespread, you take out this hinge and then into an upward stride. So that is, we see that often. Here's another example of a hinge. The only difference between these 2 schematics is this one involves a spring, which is a slight break to new lows. This one is a higher low. This is even more dramatically reduction of price spread and volatility, which is bullish because that shows attributes of absorption. And so you can see here then a breaking out of the hinge, widespread, high volume, and then up and out of the resistance area. We were just talking about the example of breaking through key resistance areas and doing it on volume. So that shows good demand, a willingness to buy at higher prices above the high price set by the accumulation area. Here's an example of that. This is an old case study from 2018. I've shown you this in the past, years ago, wrote blogs about it, I do believe, and also did videos. But here we go. Look, here's the hinge. This is actually a weekly chart. And so you can see a bit of a spring type action. Didn't necessarily take out the 2016 low. This is weekly bars, which take 2 years of accumulation to form. But here are some examples of what we're talking about. Look at the very high volume that comes in on the break. This is high volume with a wide price spread down. That is bearish. And we can see this is followed by another big high volume day, widespread, down still. And then finally, when you get a reversal bar, it's a pretty wide bar, volume shrinks. We expect when spread and volume are high in the downward direction, that there's going to be further downward attempts to test and go lower. And in fact, look at what happens throughout the decline. There continues to be ease of movement in the downward direction, but volume is diminishing, which shows the sellers are becoming exhausted. That does not mean we want to buy this, but it tells us that to be ready for a selling climax and an automatic rally, which sets up a range-bound condition, as we just saw in our accumulation schematics. And here you can see that as prices go up to the top of the trading range, Look at the high volume that comes in here and here. This is a very high volume and a reversal down. Ease of movement in the downward direction. Supply is present. The CO types are accumulating these shares in the bottom half of the range. They want to identify the value zone and buy in this area, systematically accumulating stock at good prices. This is an important bar because look at the very wide spread. Best spread in here, and the volume is good. Now, it's met immediately with resistance and testing and comes back down to retest the lows of this area. Volume is high, but look, the volume is high here and has a diminished volume and diminished spread as it gets into the support zone, which shows that a small decline on diminishing volume shows exhaustion of supply. Not again a reason to buy, but look what happens is that you have pretty good volume in the upward direction. Price goes up, has a tail, and up it goes. I could talk about this chart on and on and on. Look at the volume really dry up. Narrow spread, low volume, exhaustion of supply, testing of the lows, and then the best rally in the whole accumulation structure follows. So we could go on and on, but let me move on because I have more to show you. Not going to talk much about distribution today, but a very important concept that we want to further explore in the future. We are going to talk about reaccumulation here because this is the example that I'm going to show you in the little bit of time that I have left. And this is AVGO, and you can see here that this is the reaccumulation zone for this stock. This is June to December. And here is a very important stopping action. Remember how you have a very wide bar, a very high volume, tends to stop the advance. Look at the close is in the bottom third of the range of the bar. And on very high volume, supply is massively present on that bar, which tells us that this is a stopping action for AVGO. Likely means that best case is a pause, range-bound condition, reaccumulation for some period of time in the future. And in fact, it's June, beginning of June, all the way into the beginning of December. And so you can see here a series of testing actions. And here is our schematic. You can see the family resemblance here: buying climax, automatic reaction, secondary test. And you can see here that I've actually labeled these on the chart. So, and here's a smaller reaccumulation here following good uptrends. Now, what I want to do is I want to go in and just show you some price volume relationships that are very useful and important in this chart. And so I'll let you study this for a minute, and then I'm going to return to this chart and do some bar by bar analysis to conclude our episode. And if you look here, you can see also the labeling. Here's the support zone, 2 levels of support. Here's the jump right here out of into a sign of strength, out of resistance. Notice how, remember how we said you want to see jumps or penetrations of resistance come with volume? Exactly what happened right here. And so we'll look more at this in a minute and zoom in a little bit to do that. And so note also that as this is happening here, here, and here, that you have relative outperformance, relative strength new highs in AVGO during this period. A very important clue that AVGO wants to be leadership and wants to go higher. I always put relative strength on my charts. We're looking at daily data here. Okay, now lastly, part of Wyckoff's method was point and figure analysis. Here is a reaccumulation, 23 back to early 22. It counts up the conservative count objective is missed by only one box. Goes to 900, 9.25 is where the count goes. This current accumulation that re-accumulation that we're evaluating counted up to 1175. So far, we're at 1150. So we may get into the count objective range, may be able to go even up to resistance. Relative strength is still good. We'll see. But I just wanted to show you that point and figure is very much a part of this process. Okay, so now let's turn to a zooming in here of this chart and look at the same chart, but a little more granularly. And you can see here, very high volume. And I'm actually going to put it on inspect here. And there's just no better tool than StockCharts.com for doing this analysis. You can put on the inspect tool, line up your volume, line up your price spreads, even look at what the price spreads are, and be able to see the high, low, open, close. Very important. Now, I'm just going to show you some high points as we conclude this episode. Remember that we talked about narrow range and high volume, and look at that secondary test as it rallies up towards the resistance area of the top of the buying climax. We have a good range bar here, that bar right there. And then following it, we have a very tight range. One more really good range day, but look, the volume diminishes from the prior up range day. And the secondary test comes on a very narrow price spread, and the volume is still relatively elevated. Look what happens the next day. Volume expands a lot, and the price spread widens, and it closes below the low of the narrow range day in the prior day. That is supply present coming back in. There are active sellers of this stock at the resistance zone. Now we go out further. We could actually analyze each one of these bars, and this really is one of those things that requires a tremendous amount of detail to do and do well. And this is the reason a lot of people don't do tape reading, because it's very nuanced, it's very granular, and you have to really love looking at these charts. And so note this very high volume or very high widespread push to resistance right there on that bar to the left of where our inspect bar is. And then the volume is high. Now, is there an element of supply in that? Well, look what happens the next day. Volume is nearly as high, spread is very narrow. The spread, that's effort without result, effort and volume without result in an upward price move through resistance. So that demonstrates that supply continues to be present at resistance. This is not a stock that's ready to go up. Look at this very big volume bar and the very tight range day. There was some very large selling on that day. One attempt to test the buying climax peak, volume was very low on that upward surge, and that shows lack of demand. So spreads widened, volume diminished. That is not a bullish condition, as we saw from our rules. And then you can see here that the continues to be churning at the resistance area, and then look what happens. A wide down bar right there, and very volume expanding from the immediately prior days. And this is the beginning of the downward move to the area of support. Now, this bar is interesting because this is a close on the highs of the range, narrow range day, which took out the lows from June, and the volume was low, which shows that there was an attempt to take prices down that failed. and there was really minimal supply, and that showed exhaustion of supply at support. We expect prices will go up from here, and they do go, in fact, up to resistance, but look at the volume that comes in right there on that turn down. So this goes on repeatedly. I'm not going to keep going with this. I'll let you do this on your own. Look at this day. This is a close about in the middle of the range, which is a spring of the key support area with very high volume. Now, if this low can hold and it comes back in, which in fact it did, we would expect testing of that spring bar. And we can in fact get testing twice. The volume is low on the attempts to go back down. There is minimal supply present to push prices down. That is bullish. And in fact, we see here, look at how the volume on this touch of the resistance area is coming on less volume. That shows, even though it's high volume, it's less than the other areas of resistance. So that tells us that the active supply that's coming in and selling at the buying climax resistance zone is exhausting itself. This is a key to being able to break out in the future whenever that might happen. And down we go, and we see again, volume continues to be present on the decline. I think this volume represents demand coming in, and but we won't know until we start to turn off of this. And let me just conclude this whole analysis, because look at this beautiful jump up and out, is that one of the key elements that tell us, and we don't want to get involved with the stock until it's done being reaccumulated. We want to own it when it's ready to go up. That's a key feature. So when we're doing all this analysis, we're basically dispassionately watching and looking at this chart and waiting for the moment when we can start to own this stock. We want to see volume expand on the up days with widening spread, ease of movement up. We're seeing some of that. We could see this on this bar. We see it some on these two bars to the left of the inspect, and we see it on the breakout. Look at the volume come in on the breakout. That's one of the key conditions we look for. That says that all the overhead supply has been absorbed. And then it goes up into a sign of strength. And when it comes back down again, look at that very high volume on that break. So we would worry supply is coming back in again, but it comes back down. Look at the spreads narrow on the decline. That's quite bullish, and the volume is diminishing as it pushes down into old resistance, new support. And that is followed by, look at the volume come in, highlighted in green. Look at all that volume come in. That's just good demand driving it up. It's up into our price target on our point and figure. So we may have to have another range bound condition here, and we'll watch it. But a good campaign, and the entry places that look most appropriate to me is this local spring for a tranche, a small tranche with a close stop. And then this low here has elements that suggest prices are going up. This breakout and this backup represents another place to initiate trades. Moving up stops with every new addition to the holdings, and we'll talk more about that later. So, and then of course, all this good support from relative strength going to new highs. That is our introduction to tape reading here. We could look at every one of these bars and evaluate them, which we do. I wanted to show you some of the key principles and high points. I did it quickly, but you will find that when you look at charts, you can never look at them in the same way again, because there's so much nuance and detail, whether you're looking at intraday, daily, weekly, monthly even. You will see so much detail in these charts that can serve you and help you to identify the best places to buy, the best places to sell, when to initiate, when to add, etc. And with that, if you like what we're doing here and you'd like to see more, let me know. I want to know if you would like to do more of this. I know that it's a small group of people that really care to do this kind of work, but I'm interested in helping people to advance their skill sets and their mastery. That means the most to me, is to see you become really, really good at what you do. And with that, I will say so long. Thank you so much for being here, and we will see you next time on Power Charting.